Hi, I am Anna. I come from www.ntvforex.com. Hints of a respite to dollar selling as gold threatens to pull back. Video analysis. http ntvforex.com News ID bfe60b 7/28/2020 12:44 p.m. Market Overview. Selling pressure on the dollar has been a huge factor across major markets in recent sessions. However, with month-end, a Fed meeting and subtle shifts in the COVID outlook, is this move about to see a retracement and a near-term dollar rally? There are signs that perhaps the increase in US COVID infections may be flattening off. We are beginning to see rates pick up across the Eurozone once more. Could this subtle shift be enough to take focus away from the perception of US economic underperformance? The FOMC begins its two-day meeting today, and the July meeting contains no projections, and traders will be wondering where the dovish surprise could come from that would drive renewed selling pressure. Furthermore, can Congress come to an agreement on the latest round of US fiscal stimulus? The paycheck support from the CARES Act expires this week, and Congress will be eager to see a replacement agreed. As this all comes together, it is interesting to see some of these extremely overbought markets threatening to pull back this morning. Gold is $40 off its overnight high of $1,980, whilst Euro USD, USD JPY, and cable are all back from their extremes too. Is this a moment where profits are taken? Month-end positioning also becomes a factor too as the week develops. Wall Street closed solidly higher last night, with the S&P 500 0.7% at 3,239, whilst futures E-mini S&Ps are all but flat this morning. Asian markets have again been stable overnight, with the Nikkei 0.3% and Shanghai Composite 0.2%. European indices follow a similar path, with FTSE futures 0.3% and DAX futures 0.4%. In Forex, there is an early hint of a USD rebound, albeit only slight, with Euro and NZD the main underperformers initially. In commodities, the hint of dollar rebound is also reflected through gold trading $4 lower 0.2% but also around 2% off its earlier highs, whilst silver is around 1% lower today. Oil is around the flat line. There is a US focus to data on the economic calendar today. The S&P Case-Shiller House Price Index for May is at 1400 BST and is forecast to remain at 4.0%, once more 4.0% in April. The main data for the day will be the Conference Board's U.S. Consumer Confidence, which is at 1500 BST and is expected to deteriorate in July to 94.5, down from 98.1 in June. Also keep an eye out for the Richmond Fed Composite Index at 1500 BST, which is expected to improve to 5 in July from 0 in June. Chart of the day: Euro AUD. We have been following the development of a potential recovery on Euro Aussie for a while. With the Euro taking off in the past week, this recovery potential is growing. It is taking several weeks, but a rebound from the June low at 1.6030 has found a second low around 1.6100, which means that a move above a prospective neckline at 1.6585 would complete a base pattern. This pattern is still some way from completion, but the market has now broken the last of any downtrends that remained and has moved above initial resistance at 1.6445, which has been holding back the bulls in the past 5 weeks. The way is now open for a test of 1.6585 key near-term resistance, which is a neckline of the base and also a pivot resistance. The momentum indicators give real encouragement, with the RSI above 50 for the first time since April, whilst stochastics are also increasingly positive and MACD lines improving. This looks to be a market ready to make the next key step in the recovery. A close above 1.6585 would imply 580 pips towards a test of the April rebound high of 1.7195. Increasingly we see near-term weakness within the base being a chance to buy for the recovery. Initial support band 1.6280-1.6400 holding would be something for the bulls to now build from. Brent crude oil. The bull control on oil is being tested, but so far is holding. Throughout the rebound since the April low of $16, the recovery uptrends have been constantly broken and subsequently been redrawn with an ever shallower trajectory. So it has been the support of the rising 21-day moving average today around $43.10 that has become a mainstay in flanking the move higher. There has not been a closing breach of this moving average since the May rally really kicked in, and although there was another significant test yesterday, once more the indicator held as a basis of support. However, as the market has again failed to decisively push on in the past week, the recovery and moving average is flattening. We are becoming skeptical over the positive configuration of momentum being able to sustain the drive higher too. The overhead barrier of $45.20, the old key March bear gap resistance, is sizable. The tendency for small-bodied candles now also suggests a lack of conviction either way in the market. It is becoming a market in need of a catalyst again. Given the recovery and continued run of higher lows, we still see a mild positive bias in the market for a test of $45.20, but it really is a tough trade to back with conviction. Support initially at $42.35 above the $41.30 first real higher low. A close above $45.20 would open $48.50. Dow Jones Industrial Average. A day of mild gains has just eased the selling pressure which has been threatening to build over recent sessions. Ticking higher by just over 100 points, the Dow has sustained its uptrend since the April low and helped to bolster the support band 26,300–26,610. It is interesting that the bulls could not see the market close above 26,610, and if the market just slips back from here again today, it would introduce the prospect that 26,610 is becoming a basis of a new pivot. Around the support of the near 4-month uptrend and the 26,610 potential pivot, this suggests the market still looks to be trading around a crossroads. The importance of resistance at 27,070 will be growing all the time it remains intact. Momentum has notably tailed off in the past week, and unless the bulls look to reassert themselves soon, this phase of trading will suggest that the recovery is waning, and this could be turning into a bigger range play. Read more analysis here. Euro USD, GBP USD, USD JPY, Gold. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.